Welcome to ForexTV.com. Today's Wednesday, August 5th. I'm Tim Kelly with your New York Forex Market Buzz. The dollar continues to lose ground against the euro and the British pound at mid-session. U.S. equity markets are sharply lower after a private sector employment report showed more Americans out of work than economists were expecting. Gold and crude oil futures are trading marginally lower but off their session lows. Yield on the government 10-year note is 3.65%, down 3 basis points. Private sector employment showed another notable decline in the month of July, that according to a report released by Automatic Data Processing, ADP, on Wednesday. Although the pace of job losses slowed to its slowest rate since October of 2008. ADP also said non-farm private employment fell by 371,000 jobs in July, following a revised decrease of 463,000 jobs in June. Economists had been expecting a decrease of about 350,000 jobs compared to the loss of 473,000 jobs originally reported for the previous month. Also today, the Institute for Supply Management's index of non-manufacturing businesses, which make up almost 90% of the economy, fell to 46.4 from 47 in June. 50 is the dividing line between expansion and contraction. Today we're joined by Joe Manimbo, currency trader and market analyst for Travelex. Joe, welcome to the program.
Thank you very much, Tim.
Hey Joe, we got some I guess some would say disappointing numbers. This is a half full, half empty discussion, I guess. Numbers are declining in terms of losses, but there were more than analysts expected today. And given the history of ADP versus non-farm payrolls, what can we expect going forth here?
Yeah, I guess that could be the one bright spot. Those two indicators, the ADP number, as you mentioned, and the Challenger number, they're typically not the most reliable indicators, but nevertheless, they do suggest that we could see a weaker than expected employment report on Friday for the month of July. Also alarming was that ISM number, as you said. If you look a little closer at that piece of information on the employment index, we did see a decline on that as well, and that is a strong indicator for the payrolls data on Friday. So that does kind of set the stage for possibly a downside surprise come Friday.
Joe, in terms of the ISM index going down, how significant was that decrease in the total scheme of things? And considering that it could be 2 steps up, 1 back, is this what level of between 1 and 10? How much importance do you put on that decline?
I would attach a pretty high degree of weight to that. That's simply because, as you mentioned, that sector of the economy, the services sector, makes up such a large portion of the U.S. economy. So that does carry added weight, and it kind of counters the number that we had seen on Monday, the ISM index for the manufacturing side that had been better than expected. So yeah, it is a bit alarming, and I think it just underscores the precarious state of the outlook for the global economy.
Well, Joe, shifting from the macro view, we'll come back to that in just a moment as we look out ahead. But right now, for today's session, we're seeing some impressive gains in sterling. Got over that. Just doing a data check here, 169.50 was a pretty strong resistance level. That was taken out last night. And sterling continues to trade near session highs here at 170.26. It hit 170.42 today. In terms of the macro picture and the economic picture, is this move justified? And if so, how much further do you think we have to go here?
Well, yeah, I think the data that we saw overnight, the PMI services sector, that was the best reading since February of 2008. Coupled with the industrial production number, that was also the best number since October 2007. I think also coming on the eve of tomorrow's Bank of England meeting, that just shows more signs that the UK economy is stabilizing and perhaps could be on pace to grow later this year. And also ahead of tomorrow's Bank of England meeting, that does introduce the notion that perhaps they will be less likely to increase quantitative easing measures designed to boost the economy.
Yeah, I saw a survey on Bloomberg today that said 2 to 1 analyst trading, firms trading gilt, they're expected that they would not expand that, and some even thought that they perhaps would stop altogether in the very near future. I'm not sure where you stand on that issue, but certainly green shoots in the UK, right?
Absolutely, yeah, that does bode well for the economy going forward. But keep in mind, like most other major economies, we have to keep an eye on unemployment, which is seen rising in the months ahead.
Okay, Joe. Euro is rising. Is that in sympathy? Is that just dollar weakness here, or are we supposed to take the UK situation and bring that over to the Eurozone? I just don't know that the situation there is the same. But nonetheless, euro continues to climb here, especially in a day where U.S. equity markets down. You would think, and commodities down. You'd think that we'd be on the downside on euro today. But
right, exactly. Especially with that weak number, we saw some retail sales figures out of the eurozone this morning, and those disappointed. So I think most of the move that we're seeing in the euro being stronger against the dollar, that's largely the result of sterling being firmer against the greenback. I think it's lifting up euro dollar.
Okay. Now we are seeing the risk trade act or behave as one would expect when the equities are down. As risk aversion. We're seeing CAD come off a little bit, but not that much considering the depth of the declines in the U.S. equity markets, and in Europe overnight. We've got Aussie and Canada pulling back slightly, but not that far, Joe. What do you take away from that situation?
I would say, for the most part, we still have those key events this week, so perhaps we're just seeing a little bit of consolidation. We do have those two central bank meetings that we had mentioned. I don't know if we actually even talked about the ECB, but that is also scheduled for tomorrow. And,
right.
Of course, the U.S. jobs number on Friday. So that event risk, I think that's keeping some investors on the sidelines.
Well, in terms of ECB as event risk, I mean, what can we expect out of there? I mean, there's not too much expectation of change, and perhaps just looking towards the language of the minutes.
Right, exactly. I think just listening to the ECB president's post-meeting news conference, if he hints on any type of increase in quantitative easing measures, that would certainly put some pressure on the single currency, one would think.
Okay, and Joe, you know what? I'm gonna leave the best for last here. We've covered a little bit of easy ground, I think. So now I'm going to take you out to the woodshed and ask you about.
Okay.
I'm going to ask you about dollar yen. This is always the trick question at the end of the segment here. What's your take here?
Dollar yen, I think that's just underscoring the heightened level of, well, not so much heightened level, but the higher degree of risk aversion that we've seen basically brought on by some of the disappointing U.S. data today. So I think for the most part that's being one of the better performing safe haven currencies, and that's hurting the dollar against its Japanese counterpart.
Okay, Joe, last question. In terms of looking out a week or two, what on the horizon for U.S. dollar seems to be under a lot of pressure right now. A typical trader hears the U.S. administration talking about strong dollar policy. We're talking about having some positive signs in the economy here, yet the dollar just continues to weaken across the board. In the weeks ahead, anything that might lift the dollar out of this?
Next week we do have an ECB meeting. A Federal Reserve meeting. So if we could get some type of improved outlook, some type of confirmation coming from the Fed directly, I think once we get past all this kind of risk-on, risk-off trading, I think the dollar does have the potential to rise on the notion that the U.S. economy could be among the first major nations to recover from the recession. And that being the case, we would likely see U.S. interest rates eventually move higher, and that, I think, would be supportive of the U.S. currency.
Okay. Hey, Joe, that seems like a pretty good place to leave it there. You've you came out of this one okay here, even with the dollar yuan question. Appreciate you. This is your first time on our show, Joe. I really appreciate you being on, taking the time out today to join us and share your thoughts.
It's my pleasure, Tim.
This has been your New York Forex Market Buzz with Joe Manimbo of Travelex. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.